Hello, welcome to my channel today. This is the King's Tutor. If it's the first time of joining us, kindly like, comment, share, and subscribe to our channel. Okay. Today we want to complete our series. We started in royalty account. Okay. Now we saw the introduction of royalty account. We saw different aspects, the types. We saw different terms, and we also solved a question relating to the chart. Okay, as royalty schedule or the chart. Now, if you have not seen that video, I advise you watch that before this. Okay, I'll drop the link up here or in my description. Okay, now I want to continue in the ledger entries. I said we are going to start with the ledger entries of the royalty. Okay, now basically to record in the ledger, it can be recorded by two persons in the book. The first person is the lessor. Now we've talked about who is a lessor. Okay, please watch that video. And also the lessee. It can be recorded in the lessor book and also the lessee. Okay, so in this video, we want to see how we can record in the lessee and also see an example relating to that. Okay, now basically the lessee is the owner, the one enjoying the right of the lessor. Okay, so in the lessee's book, I'll say in the lessee book, there's three ledger accounts that is to be prepared. Basically three. Others, it depends on the question if you're asked to do that. Okay, for a main lease, not a sublease. In the sublease, we're gonna see other question relating to sublease. So that is why I recommend you subscribe to this channel so you don't miss that. Okay, the sublease is when the lessee is giving the rights also to another person to enjoy. Okay, we're going to see that. But in the lessee book for a main lease, okay, the three basic accounts that is to be prepared is the royalty payable, account. Now it is seen as an expense and as an expenses account by the lessee. Okay, another one is the lessor account. Now the lessee will prepare an account on behalf of the lessor. Now he's seeing this account as the liability. He's seeing it as liability, okay, because he's paying toward the lessor, which is the owner. Now the other one is the short workings recoverable account. Now he's seeing this as an asset. Okay, these are the basically three accounts that is to prepare: the royalty payable, the lessor, and the short workings recoverable account. Okay, all of the accounts can be specific on the question, but once they say prepare the ledger entry in the book of the lessee, it is a royalty payable because it's going to pay royalty. The lessor is preparing an account on behalf of the lessor, and also the short workings recoverable. Okay, now if you want to see the accounting entries, basic accounting entries, that is where to debit and where to credit. Now in the first one, for an actual royalty, when it is actual royalty, okay, when actual royalty, we have done that in the royalty schedule, the actual royalty gotten. Now you are going to debit, for actual royalty, you debit the royalty payable, and you credit the lessor account. Okay, and you will do that with the actual amount of royalty. Okay, that's the first one, the actual royalty. When there's actual royalty, you've seen that in the royalty schedule. You debit the royalty payable account because an expense account, all expenses have debit balance. Okay, and the credit entry is coming to the lessor because they are going to be paid. Okay, now the next one is if there is short workings. If there is short workings, now the debit, and the credit. Now, if there is short workings for the debit, we'll have short workings recoverable account. It will be debited to short workings recoverable account, while the credit entry will go to the lessor account, and this amount will be with the amount of short working. With the amount of short working, okay? With the amount of short working. When there's short working, you debit the short working recoverable and you credit the what? The lessor account. Now the next one is if there is short working recoup. Now if they recoup the short working, now what do you debit? Now it's the other way around of this. You debit the lessor account and you credit the short working recoverable account. Okay, now this amount will be with the amount recouped or recover. With the amount recouped or recover. Okay, that is when there's recoup. Okay, now another one also is if there is short workings elapsed. Short workings elapsed. Now we talked about this. That is when the number of years is exhausted. So we said you debit the statement of profit or loss and you credit the short workings recoverable account. Now it will be with the amount elapsed, as with the amount that is elapsed. While the last one is royalty paid to lessor. When the royalty is being paid to the lessor, now you debit the lessor account and you credit the cash account or the bank account with the amount paid. With the amount paid. So these are the ledger entries basically. The first one is the actual royalty. When there's actual royalty that is conducted, that is calculated, you debit the royalty payable, you credit the what? The lessor account with the actual amount of royalty. Now the next one is the short workings. When there's short workings, we have explained that the amount that is lesser than the minimum rent, you debit the short workings recoverable account and you credit the lessor account with the amount of short workings. Now the next one, short workings recoup. When they recover some amount of money, you debit the lessor account, you credit the short workings recoverable account with the amount recouped. Okay. Now the fourth one, when short workings elapse, debit entry goes to the statement of profit or loss account, while the credit entry goes to short workings recoverable what account with the amount that is what elapsed. While the fifth one is royalty paid to lessor with the actual royalty that is paid. Okay, that's the actual amount that is paid to the lessor, which is not below the minimum rent. Okay, now you debit the lessor account and you credit the cash account with the amount that is paid. Okay, this is basically the ledger entries in the book of the lessor when it is not a sublease. When it is not a sublease, that's the main lease. Okay, now there's something I want to say. Take note: the short workings account is divided into two. Basically, it can be short workings recoverable and not allowable. Allowable is when the lessee allows it for a sublease. We're going to get into that. Okay, so this is basically the ledger entry. Now let's see a question on how to solve this in the book of the LESSEE. Okay, on how to record this. We're going to see a question now. So please ensure you have subscribed to this channel. Okay, now let's see the question. Let's see the question. Okay, showing on your screen. It said, Onyema Coal Limited leased a colliery on 1st of January 2020 at a minimum rent of 15,000, merging into a royalty of 1 naira per ton, with a stipulation to recoup short workings over the first 3 years of the lease. The output for the first 4 years of the lease were 8,000, 13,000, 21,000, and 18,000 tons, respectively. Okay, now required draft the necessary books in the book of the company to effect the above. Okay, so now we have seen the question there. Now let's prepare the ledger entries, okay, in the books of the LESSEE. Okay, now basically I told you before now that we have to record or prepare the royalty schedule first, so that it can be easier. Okay, so now I said in the books of the LESSEE, now let's prepare the royalty schedule. Now I said it looks thus. The first one is the year. The second one will give us the output. While the third one will give us the royalty worked. Let's open that a little. Now the next one will give us the minimum rent. Now the next one will give us our short workings. The next one will give us surplus. The next one will give us short workings recoup. The next one will give us short workings elapse. The next one, payment to landlord or lessor. Okay, now if you check in the question, now they said for 3 years, so the first, the second, the third, okay, for 4 years. Okay, now I said the first output of the lease is 8,000. The second is 13,000. The third is 21,000 and 18,000 tons, respectively. Okay, now they said 1 naira per ton. 1 naira per ton. Now 1 naira per ton, it means we multiply this, we've done this before, times 1 naira. Now it will give us 8,000 times this will give us 8,000 naira. Now the next one, 13,000 times 1 naira per ton will give us 13,000. The next one, 21,000 times 1 naira will give us 21,000. The next one, 18,000 times 1 naira will give us 18,000 naira. Now the minimum rent, they said the minimum rent is 15,000 naira. The minimum 15,000 naira. Okay, 15,000 naira. Now is there short workings? Now they made 8,000 and minimum rent is 15,000. So we said the short workings is what? 7,000. Please watch the previous video to get this. Now we have surplus, no. We have short working people, no. Elapsed, and the payments to the landlord is the actual minimum rent and nothing less than the minimum rent. That's 15,000. And the next one, they had 13,000 and minimum rent is 15, so short workings is 2,000. Okay, so the next one, the surplus, no recoup, no elapsed yet, then 15,000 to landlord. Now the third one, they had 25 to 1,000 and short minimum rent is 15,000. So it means that there's no short workings, but they have surplus of 6,000. Now if you check in the question, they said with a stipulation to recoup short workings over the first 3 years. Now this is the first year, the second year, 3 years, the third year. So we can recoup at this point. So they're recouping 6,000, but the short workings is 9,000. It means the elapsed 3,000. Okay, so now payment to the landlord is still 15,000. Okay, why the last one they made 18,000. No short workings, and they had a surplus of 3,000. No recoup, no elapse, and they paid everything that was made, which is what 18,000. We explained this in the previous video. Okay, so this is a royalty schedule. Okay, now basically let's start preparing the ledger entry. Now, so the first thing we'll have to prepare is the royalty. So we'll prepare the royalty payable. The royalty payable account. The royalty payable account. Now we say we are going to debit with the actual royalty. Now look at the actual royalty. The royalty work, the actual. If you check in double entry, what we say debit for the actual royalty, debit the royalty payable account. So we are debiting this. Now this for year 1 because there is no year that was attached to it. So year 1 will have the name of, let's say, the lessor, because the corresponding entry is going to the lessor. So lessor is first one is 8,000. Year 2, the same lessor, 13,000 naira. Year 3, lessor, actual royalty 21,000, and year 4, the lessor is what? 18,000. Okay, so that is the year. That is the royalty payable account. Okay, now the next one is to prepare. Remember, we said we'll prepare basically 3 accounts: the royalty payable, the lessor account, and the short workings account. Okay, so let's prepare the lessor account. Now the lessor account, which is Uyema, look up. Now we have is year 1. We have year 1. Now we said for the actual royalty for the first year, we said we debit the royalty payable and we'll credit this account. So we'll have here the royalty of 8,000. Okay, now let's prepare everything together. Now this will now be short workings. Short workings account. Short workings account. Okay, so the corresponding entry comes here as what? As royalty. Now, but we said the actual amount when an actual amount is being paid. When an actual amount is being paid, now you would debit this account with the actual amount, which is what? 15,000. So we have cash of 15,000. Okay, I have cash of 15,000. So, and they are paying royalty of what, 8,000. So it means there's a short working. So it is a short working of 7,000. So if we add this will give us 15,000, and this is supposed to close with 15,000. That is for the first year. Now, this is a short working, and the corresponding entry comes to the short working account. And everything here now is year one. Okay, so this becomes the LESSOR 7,000. So since it's 7,000, we have balance carried down here for that first year, 7,000. So close is 7,000, 7,000. So for year two, it will be brought down as balance brought down 7,000. So that is the first year. Remember, the minimum rent, the lessor is supposed to receive 15,000, but they made actual reality 8,000. So this is a short working 7,000. It has reflected short working 7,000. Okay. Now the second year for year two, lessor is 30. The actual reality is 13,000. The corresponding entry goes to the lessor. So if we have year two, now we have royalty. Royalty is what? 13,000. But they are supposed to receive 15,000 as a minimum rent. So it means cash 15,000. So there is also another short workings. So short workings of how much? 2,000. So this will give us 15. This is 15,000. So the short workings entry come here. Now, short workings as lessor, or lessor, which is 2,000. Okay. Now this will give us 9,000. Now the balance carried down as a 2. Balance carried down as 9,000. It's 9,000. Now for the year 3, it is brought down as balance brought down 9,000. Okay, so that's year 2. Now year 3 here, the actual reality was 21,000. So the corresponding entry comes here also. Now this is year 3 now. Year 3. Now the reality is 21,000. Okay, but they are supposed to receive cash of 15,000. So there was surplus, and it was even still in this year that they made what? Recoup. So remember, I say when there's recoup, what? You debit the what? This account, the lessor account, and you credit the short workings account. So we have short workings recoup. Short workings recouped of how much? Since there's 21 and 15 of 6,000. So this will make it 21,000, and this is 21,000. So the short workings recoup will come to this part. Okay, so we'll have here for year 3 the short workings recoup as 6,000 here. Now we'll have here as the lessor 6,000, which is recoup. Okay, which is recoup. Now the remaining 3,000 has been elapsed. The remaining 3,000 here is what? Elapsed. So we're going to write elapsed that is sent to profit or loss. 3,000 to make this 9,000, and this is also what? 9,000. To make this 9,000, and this is what? 9,000. Okay, so this is the account. Now for the 4th year, they made 18,000. So we'll come here also. Now this is year 4. and this is year 4. The royalty is what? 18,000. Royalty is 18,000. Okay, and what they paid, everything they paid here is also what? 18,000. That is the cash. As the cash is also 18,000. So it balanced automatically. What they made was what they paid. So this account has balanced. There's no short working at the end. Okay. Why this now? Now look up. At this point now, because this is production, they didn't say sales. It is not sales. It's production. So it will be close to the production account or manufacturing account. So we'll close here. Year 1. This is close to the production or manufacturing account as 8,000. Now year 2, this is close to the production account as 13,000. Now year 3, this is close to the production account as 21,000. Now year 4, this is close to the production account as 18,000. So this is how to basically solve in the LESSEE book. The royalty account, the LESSOR account, and the short working. Okay, so it fully reflects that. So please, you can watch that more than one time so that you can feel that. Okay, so that is that. The actual royalty, the corresponding entries is there. The royalty, the short workings, the corresponding entry is there, and all that. So this is basically how to solve in the LESSEE book. Okay, so if you have any question or anything, just drop in the comment section below. Okay, please ensure you have subscribed to this channel. We have what also in the sub list. Okay, we have to treat that. So ensure you subscribe, like this video, and share. Thank you very much.